Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
Now getting to another source of rotation and also topic when it comes to the stock market is US exceptionalism, where we're sitting here in the grounds of an investor foundation that has always had a global approach to investing. And that I'd say reflects most in foundations and institutions in the US as well as around the world. But the US exceptionalism, I think the bell keeps ringing on this. And there was a suggestion that we'd seen it recede. And now it seems to be back again in terms of the multiple relative to the rest of the world being still being high, but being justified because of this strong underpinning. And it is historically expensive based on the cyclically adjusted price earnings ratio. But again, there would be a suggestion that this, because these earnings are so robust, that this is actually being justified. So I suppose I sit in Europe and I have a few slides later showing that things aren't actually that bad outside the US, but the narrative certainly seems to have taken hold. And I think there was an interesting counterpoint here by Mohammed El-Arian in the Financial Times. He suggested the US decoupling from the global gloom has limits. And he's acknowledging that the US has taken its own path, but that does not, we are still interconnected and we are still dependent on trade. We are still dependent on our trading partners for demand as well as for parts. So whether, I suppose the question here, is there a global gloom? That might be a big presumption, but equally whether the US can exist as an island that is distinct from that.
I disagree. I mean, I think that we need international trade, and to the extent that markets are undervalued offshore, I think that's an opportunity. The managers that we deal with candidly have started to take increase their positions globally or outside of the US. And yeah, I mean, there are some certainly good values. I think that maybe they don't necessarily have the tech exposure that the US has, and that clearly is what's driving the US markets at the moment for the most part. But there are good values offshore.
And I think based on the idea of following the money, if we are if the US has almost become a new economy stock market, whereas many of the other stock markets, I was just in Australia, very classically old economy, financials, mining, FTSE, classic old economy. So none of these have been hot tickets, but they're also, the old economy is called the old economy because it's still there. So these kind of steady state as the building blocks of the economy are still in demand. We know that energy will still massively be in demand. Mining, especially since of copper, massively in demand. So I would suggest that these old economy may not be getting headlines, but they are also quite an important part of the global economy. And equally, if we're looking at we're talking about the next leg down, perhaps, or leg up in terms of AI adoption. If it comes, we're talking the US in the mid-cap segment, shouldn't there be big swathes of companies in Asia and in Europe that are also poised to unlock their own productivity gains through AI? So I think to write off does seem to be. It seems like you would agree maybe with the headline here then, that the decoupling it cannot continue.
Correct.
Yeah.
Yep.
And I think that when we mentioned this tech trend being global, this is some slides here from China, speaking about China's unbalanced recovery, which it is showing that the consumer, it was always about the China consumer. For years, it was always about this consumer that was poised to start to consume and to really take their place with other world consumers. And it was the consumer durable stocks and discretionary stocks that were actually in demand. Here we can see that China has become almost a mirror image, well, actually a carbon copy, should I say, of the US in terms of infotech dominating there, as well as materials, the underlying source, and the consumer has actually been quite flat. So that I think is an interesting kind of turn up of the Chinese picture, and that we're still doing very well, for example, in the Shanghai Shenzhen CSI 300 index. So definitely a tech trend has captured the imagination out east. we have some highlights here of the delegation that went to, again, all within Air Force One by the looks of things. Elon Musk, Jensen Huang, and Trump, as well as a number of other of his high level officials in China for quite I'd say some interesting diplomatic theater. Probably we had analysis of the handshake, analysis of the parade, analysis of some of the gestures, and a lot of even analysis of the menu and of the music choices, from what I can see. So clearly a very exciting moment in terms of the next stage for these two competitors. And I think what should not be overlooked, I found an interesting chart here showing just the change of market share that some of the industries in China have taken in terms of their share on the global stage. Just look at maritime engineering, railway construction, robotics. They're massive growth in share taken by China. And this was a point we made in our Singapore podcast recently, that China has become, it's no longer a sleeping giant.